Coming up on Market to Market, one of the last named cabinet secretaries gets his day in the spotlight. A landmark water quality lawsuit is all wet in the eyes of a judge. And the former head of the USDA weighs in on trade in his new job. Those stories and market analysis with Chris Robinson next.
The way electronic screen trading is.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, March 24 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. President Donald Trump continues to reverse decisions from Barack Obama's time in the White House. Late this week, the president greenlit the completion of the $8 billion Keystone XL pipeline. The Trans-Canada project was called part of a new era of American energy policy in an Oval Office event on Friday. While a Supreme Court nominee hearing and the health care debate garnered much of the spotlight, the Senate's Agriculture, Nutrition, and Forestry Committee room was the focus for many in rural America. Former Georgia Governor George "Sonny" Perdue's appearance comes as many in rural America, the same electorate that helped put Donald Trump into the White House, have felt slighted by delays in the selection process. Peter Tubbs reports.
Sonny Perdue finally had his day in the committee room. Committee members wanted to hear from the former governor how he plans to show rural constituents he will fight back against the proposed cut in funding.
Governor, as secretary, how will you ensure that Ag's voice is heard loud and clear within this administration to fight for our farmers and ranchers, to ensure we have access to new markets abroad and not face retaliation?
Food is a noble thing to trade. We've got a great story to tell. We've got producers here that can produce more than we need to consume. That's not the case in many parts of the world. So why don't we use that bounty to supply one of the fundamental needs of mankind around the world?
Can you commit to ensuring that we'll have a strong RFS to provide economic security for these rural communities?
I can do that, and I'm happy to have also the president's commitment of his concern and interest in that area as well. So,
I wanted to talk to you a little bit about crop insurance.
Sure.
It's critically important to my state. It's something that we're going to be working on in the Farm Bill.
I thought you all in the 14 Farm Bill made a lot of progress in the crop insurance area. Obviously, it can always be refined and made better, but it's vital to farmers, good producers there that need that safety net of both the risk of production and pricing that you all did so well in that area. And I hope we can even continue that and enhance that. To me, I think the American taxpayer gets a good value for that, and hopefully we can work together. I look forward to working with you all as we continue, if I'm confirmed, to make sure that the crop insurance program is sound, solid, and a good economic value.
I'd ask you to support finding a way to include dairy farms, which require year-round labor. I mean, you can't have somebody come in for 6 months and then say, okay, to the cows, I'll be back in 6 months and to milk you again. So we have sheep and goat herders have that exemption. Will you work with us to find a way to have dairy farm workers in the same program, the same way goat and sheep herders are?
There's a need. Obviously, many of our dairy workers are immigrant workers, and while there are exemptions in other places, certainly I believe dairy qualifies for that as well.
No date has been set for a vote on Perdue's nomination. For Market to Market, I'm Peter Tubbs.
Texas, Louisiana, and Arkansas are off to an above-average start in their 2017 corn planting. Much of the Corn Belt is without snow as the ground temperatures have risen and the tile lines are beginning to run again ahead of field work. Farmers and environmental types anticipate this time of year for vastly different reasons. Josh Bittner reports on the latest legal developments involving water quality.
Late last week, a federal judge dismissed an historic lawsuit between Iowa's largest drinking water provider and 10 farm drainage districts in 3 northwest Iowa counties. The suit alleged excess nitrate runoff from farm fertilizer impedes the Des Moines Water Works' ability to comply with federal guidelines for clean water, claiming drain tile infrastructure upstream increases levels of the nitrogen byproduct in local waterways. Downstream, the utility taps the Raccoon River to serve over 500,000 ratepayers in Iowa's capital and surrounding communities. Waterworks leadership said they will review their options, and in a statement, CEO and General Manager Bill Stowe said, "We are disappointed in the ruling and the court's unwillingness to recognize the profound water quality impacts that pollution from drainage districts has on Iowa waterways." In 2015, Des Moines Water Works spent $1.5 million operating one of the world's largest nitrate removal facilities. However, Waterworks officials believe they will need $80 million to maintain and upgrade machinery in the not-too-distant future. Filed in 2015, the litigation sought to abolish agriculture's exemption under the Clean Water Act by redefining farm tiling as point source pollution. The case was set for a showdown in federal court this summer, but the legal arguments were dealt substantial blows in the past few months. In January, the Iowa Supreme Court upheld the immunity of drainage districts from financial damage claims. And the recent federal ruling contends the Iowa legislature is the appropriate venue to address water quality.
I say rise up, you say!
But critics maintain recent State House actions have been more concerned with dismantling authority of Des Moines Water Works and its lawsuit through regionalization rather than tackling the real issue. Though critical of its lack of timeline and accountability, Stowe concedes Iowa's 2013 nutrient reduction strategy, part of a larger plan to limit nitrogen and phosphorus flows throughout the Mississippi River Basin, is now the state's de facto path for clean water. Iowa Secretary of Agriculture Bill Northey has championed voluntary conservation methods like cover crops and buffer strips. He hailed the lawsuit's demise in a statement, adding, "There is still a lot of work to be done, but I truly believe that by working together, we can make big strides." And with the looming issue of regional water authority awaiting floor debate, stakeholders are on the lookout for the Iowa legislature's next move. For Market to Market, I'm Josh Bittner.
Tom Vilsack was one of the longest-serving agriculture secretaries in more than 50 years. As USDA chief, his job was akin to parenting, where conventional wisdom says you don't pick favorites among your children. But now, life in the private sector has the former secretary discussing one commodity more than others. Earlier this week, I had the chance to sit down with Mr. Vilsack. You can watch the entire interview on our website or on our new YouTube channel. We started off talking trade, and specifically his thoughts on NAFTA. Our conversation is our cover story.
Well, we in the dairy industry felt that it was important and necessary to send a very strong message to our Mexican producers and processors in terms of the dairy industry in Mexico, that we are keenly aware of the anxiety and concern that they now have about their relationship with the United States, and we wanted to reassure them that this relationship was important. So our goal was to reassure the Mexicans that we believe in this relationship, we believe in NAFTA. NAFTA has worked for agriculture in Mexico, and we wanted to preserve what is best about NAFTA and strengthen what isn't working as well. And we tried to reassure folks that right now there's a lot of uncertainty because there are not the people in place to provide the assistance and help to the president to make decisions. And it's also the Secretary of Agriculture. We do not yet have Governor Perdue confirmed, so he's not there to be able to remind folks of the importance of agriculture in these trade discussions.
Now, one of the things that President Trump has said repeatedly after backing out of the Trans-Pacific Partnership, he said America could secure a better deal by forming bilateral trade agreements. What, in your mind, is the probability of getting some of these bilateral agreements accomplished with those partners in Southeast Asia?
When we enter into bilateral agreements, essentially TPP is not the ceiling, it's the floor. And what can we add on top of it? That creates complexity. The other thing that's a challenge in bilateral agreements is, again, we're dealing with countries where agriculture is their number one or number two interest and issue. It may not be number one or number two or number three or number four on our list. Oftentimes you're seeing ag essentially negotiated in the context of getting something for steel or getting something from autos. So it's complex. At the same time that's happening, or we're trying to make that happen without people in place, again, the rest of the world has not stopped. The EU is now in the process of trying to negotiate. China is coming in and is basically saying to these Asian nations, hey, you know what, the U.S. can't be counted on. How about you come with us and we'll form an all-Asia trade agreement?
You were the only Obama appointee upon leaving office to actually endorse the Trump appointee, Governor Sonny Perdue. As we move into 2018, we will be tackling another farm bill. And the margin protection program in dairy is one of those things that would appear that we might try to make some changes to. What have you heard about potential changes? Is that an issue you still are keeping an eye on?
Well, because of the way in which the U.S. Dairy Export Council is funded with checkoff dollars, with USDA resources from the Foreign Ag Service and membership dues, I have to be careful about opining about policy. But I would say this, that the discussion of the Farm Bill will clearly involve the margin protection program. I think people throughout the country are not convinced it's done everything it needs to do, and it's not as useful as people thought it might be, and not as many producers are participating as there need to be. So I'm sure that policymakers will be looking at improvements. However, those improvements will be costly. But you don't have that conversation if the first thing you say, as is often the case now in Washington, we have to cut X number of dollars. What that does is it begins the conversation of, okay, I got to protect what I have, and I don't care what you need or what we need. I got to protect my piece of the pie. That pits every commodity group against one another, commits commodity groups against nutrition, nutrition against forestry, forestry against trade, trade against conservation. It's a mess, and it makes it much more difficult to get a farm bill through. So, to me, it's important for people who are supportive of farm bill programs, first of all, to stop calling it just a farm bill, because it's more than that. It's a jobs bill, it's a trade bill, it's a conservation bill, it's a nutrition bill. It's a nutrition bill. It's a lot of things that's important to every single American. But we need to have a much better and different conversation than we had starting the process, and hopefully we get a better product as a result of starting the conversation properly.
Next, the market-to-market report.
Continued pressure from a large South American crop and limited weather issues domestically kept a lid on the grain trade. For the week, May wheat lost 12 cents and the nearby corn contract fell 11 cents. Bullish export reports weren't enough to help the soybean market as the May contract dropped 24 cents. May meal decreased 10.70 per ton. In the softs, May cotton shrank 89 cents per hundredweight. Over in the dairy parlor, April Class 3 milk futures gave back 28 cents. Hogs lost some ground, but the beef sector was a bright spot as the April cattle contract increased 3.17, April feeders added 3.42, and the April lean hog contract fell $1.77. In the currency markets, the U.S. dollar index added to its string of losses, dropping another 67 basis points. Crude oil fell to its lowest level in 4 months, down $1.34 per barrel. COMEX gold gained $18.30 per ounce, and the Goldman Sachs Commodity Index increased nearly 5 basis points to finish the week at 378.25. Here now to lend us his insight on these and other trends is market analyst Chris Robinson. Chris, welcome to the program.
Nice to be here. Thank you.
Well, we're excited to have you, but before we get started, I wanted to let you know that you can listen to our market discussion anytime by downloading our market analysis podcast on our website, iptv.org/MTOM. Now, Chris, this was kind of a down week across the board. There's a lot of red on those numbers that we saw. I want to start talking about the wheat market. We were down on the week, finished a little higher on Friday. What changed, or is anything changing in the wheat market?
The wheat market, unfortunately, has been under a lot of pressure really for the past 6 to 7 months. We've been in a narrow 70-cent trading range. And the fundamental story is pretty well known. There's a lot of supply, not only here in the U.S., but worldwide. And also that we've had to suffer with the increasing strength in the U.S. dollar has made our exports less attractive. Every time there's a sale, the FSU or Russia beats us to it. We had seen a little bit of a pickup lately, but at the end of the day, there's so much supply there. We still have a lot to chew through. Interesting thing is we planted the fewest amount of acres we have in 108 years. So the stage is set so that eventually if we can chew through some of the supply, or if we get a weather issue, we could be right back at it. But certainly prices are depressed, and we continue to sort of be really a follower rather than a leader moving forward in the wheat.
Are you encouraging producers to take any action in the wheat market right now, or is it just kind of a wait and see if we can get some value built back into this market?
Well, interesting. Wheat's got the one market that has some carry in it. So if you're not paying for storage, if you've got on-farm storage, there's some carry there which you can capture and you can look out there. It's not so much for corn and beans, but there is something there. But if you're paying storage, it really makes no sense. We're recommending guys to, not sit on it any further. Certainly if you're sitting on it, keep a cheap put under it because there could be some more downside risk yet to come. Okay. But when the market turns, and it will turn, you don't want to be sitting there, having no upside to take advantage of. So that's the one thing I would say. If I'm a wheat producer, we're at depressed prices. And I just say, I think you have to keep your powder dry and wait for rallies.
Now, speaking of depressed prices, let's look at the corn market. Down, I believe, every day this week. It was just a grind lower. What happened in the mind of the trade to prompt this slow, brutal sell-off?
Well, this really started about 10 days ago. We came into the year, the funds actually were long corn at one point. The managed funds have been a really big impact in this marketing year so far because we haven't had any of the weather issues to deal with. The funds went from being long to being short last week. This week, they added to their shorts again. The commitment to traders just came out, and they built that short position up to about 85,000 contracts. So that's negative right there. They're positioning themselves for next week's March 31st USDA report. Everybody's betting on what the acres are going to be. But right now, the funds are betting that the prices are going to continue to go lower. They're also, they've been short wheat really for about a year and a half. They backed off a little bit, but they're short about 100,000 contracts of wheat. Okay. So that's weighing on the market. And, you touched earlier on soybeans. Looks like this is the week they finally flipped from being long to probably flat as we head into next week.
Okay. So on the corn side, looking out at new crop, we've yet to really get any planters turning except for the far southeast in Texas. For producers, we just watched this thing give up 11 cents on the week. Do we hold off and wait for a weather event to put some marketing in place?
Well, everybody's been waiting for that. We've had 2 business days where we were above $4 this year. Most guys need $4.20 or better this year. That's the price that most of our producers are looking at. And I think that, March 1st, we were there. We were at $4. And we've had again, when there was no follow through and you saw a flip in the commodity funds, that put pressure on what's going on. I think moving forward, rather than panic, you need to have some sort of downside protection in. There are choices out there where you can absolutely keep your upside open. But at this point, with us trading at 380, 375, the contract low was last August at 355. So that's what all the technical guys are looking at now. Okay. That level. So that's probably your near-term risk. The upside is, if we could ever get above $4, then I would you'd see some movement there, towards higher prices. Okay.
Now, you did talk about how soybeans made that transition from a long managed money position to a short. And watching the trade, Friday, 15 cents down on the day, 15 1/4. Was that intensive selling by the funds? Is that what drove that on Friday?
Yeah, it seemed, especially after about 10 o'clock, you can see that jump in the prices where they really started pounding on it. Going into the weekend. And I think that was probably the biggest surprise because they've maintained that bullish stance in the whole soy complex. They were long soy meal, bean, and oil. That was their long bet. And the commitment to traders had them long about 60,000 as of Tuesday. Probably with what happened today, they've probably chopped it down to 30. They could be flat again, we'll have to see. Every Tuesday it comes out. Friday comes out as of Tuesday.
Yeah.
So you kind of have to extrapolate and sort of guess. But they've certainly pared back their long position. And I don't think it's any coincidence you have the same movement in crude oil. Crude oil and soybeans move simultaneously very often. And unfortunately, you have we have a huge supply of crude oil now.
Yeah.
And let's face it, even with soybeans, we have a big carryout. And the question is, how many acres are farmers going to plant? The corn-bean ratio suggests that they're going to plant more soybeans. But we'll see on Friday.
And we did get a question in from one of our followers on Twitter. This is from Marty in Buxton, North Dakota, at SatMonster on Twitter. He wants to know, speaking of large carryouts, will the soybean crop in Brazil be higher or lower than 110 million metric tons? What's your thought?
Well, every time they adjust it higher, which we get the private forecasts either from Conagra or from the other firms that do that,
Yeah.
it keeps getting bigger.
Yep.
So that's my guess is big crops will continue to get bigger. You're seeing you had seen a reluctance on Brazilian farmers to move any grain, and so now they're starting to. You saw some push this week, but at the end of the day, they had the biggest crop ever.
Okay.
And we're looking at this here in the U.S. Again, we have a big carryout, and so. It's a situation where the world's producing more of what it doesn't really want right now.
Right. And potentially more acres coming next Friday.
Yeah, we'll see. I mean, that's the big guess is what are the acres going to be for soybeans? Soybeans close to $10 was profitable. Corn below $4 not so profitable. So you might see a push towards higher acres, but that's the general knowledge, the general opinion of what I have to call what's like the herd all thinks that's going to happen. So the surprise will be on Friday is if we get something out of whack north or south of 90 million acres.
When everybody gets on one side of the boat and you get spooked, it's a big reaction a lot of times.
Right.
Now, I do want to talk to you about the cattle market because that is really the one bright spot in the trade this week.
Yeah.
Live cattle just keep screaming higher. Where's the top on this thing, Chris?
We made 1-year highs in fat cattle, live cattle, contract highs now for the deferred months in feeders. And, remember where we were a year and a half ago, 2 years ago, up 150 above there. And I can remember nobody thought we'd ever have the correction that we did. You had an interesting year this year. You had the managed money. Again, I talk about that a lot, but they have a big impact. They're like a force of nature. They've been long fat cattle really for 3 or 4 months. And now suddenly with the Brazilian, I guess you call it the debacle or whatever you want to call it, Brazilian issue, now they've got a fundamental push behind them. So they're actually buying more. Managed funds, when they get a good one on, they continue to add to it. The only problem you have with that is the rubber band's gotten stretched pretty far. We've come up about $12 in the past, just a few trading sessions. So we'll see how high is high. The market, there's that old expression, the market can remain irrational a lot longer than you can remain, financially liquid. So it's not a freight train I'd want to step in front of.
Okay.
I think if you're a producer, this is why we always caution guys about getting oversold, because the market can run a lot further than you imagine it will. Right now, there's a big disparity between the board price and the cash price. Cash sale prices were up again, $3 or $4 again today, for the week. We've had a little bit of weakness in the box beef, but we'll see if that continues. But we've been telling guys that if you can make some advanced sales, don't be afraid to, because then you can just re-own it with a cheap call, keep your upside open. But I'd say a lot of money has been lost in the past 3 or 4 weeks where guys thought that the market was topped out.
Now, before we move on to feeder cattle, I wanted to ask you a question from Calvin Steggy on Twitter. He wants to know, the Cattle on Feed report released Friday, was it bullish, bearish, or neutral for the trade come Monday?
Yeah, it was neutral. Pretty much nothing out of whack there. The kill this week was huge.
Yeah.
I mean, there's a lot of animals out there. Normally I think if we weren't in the situation we had with this Brazilian issue, and that's going to play out. Nobody knows how it's going to play out. Are they going to suspend exports from there is it going to be 2 weeks, 2 years? Nobody knows. But it is long term, it should be a positive, not only for our cattle ranchers, but also it should spill over into lean hogs as well, because it's just another source of protein.
Right.
And China already, they stopped all exports of even chickens,
Right.
anything from
South
anything.
Korea, no
Absolutely.
more poultry imports. China, no more poultry imports.
Yeah.
All from Brazil. Just to clarify, Brazil packing plants are under investigation for bribing inspectors, allegedly for sending out perhaps tainted meat. So now you did mention lean hogs. That strength hasn't spilled over quite yet. We're down $1.77 on the week. Is it just going to take some time? Do we actually need to get some export sales booked to get that market moving?
I think you're going to have to see if that plays out. There was a big concern earlier that we were going to run into problems with our demand towards Mexico.
Okay.
We actually held in pretty well considering where we're at. The market, again, it's well supplied. The whole producer versus packer issue, it's pretty well known. I think looking out, if I'm a producer, I'm more concerned about the deferred months rather than what is happening right now. And the same story goes. If we can get a shift in demand, it would really help. Now, we've seen a lot of demand coming out of, by Smithfield out towards China. I mean, China has been, a lot of people thought they were front-loading their needs, not only for lean hogs, but also for soybeans. We saw a lot of support there in the first 3 months, especially right after the election. Yep. And I would watch that carefully because at the end of the day, they're a good export partner for us.
All right, so we'll just have to we'll have to see if they just keep buying.
Yeah, let's hope so.
All right. Well, Chris, thank you so much for taking the time to join us.
Yeah, it was a pleasure.
That wraps up the broadcast portion of Market to Market, but Chris and I will keep the market conversation going, including answering more of your questions during Market Plus, which is available on our website. We have a new offering for our online viewers. Now you can see all segments on our YouTube channel where you can watch Market Plus and our feature stories. The links are available through our Facebook and Twitter page. And join us again next week when we reconvene our Blue Ribbon panel to examine the impact of those two significant government reports. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.